Hi, this is Greg Gallagher with G3 Investors, and I'm going to go over a training session on candlestick uh, charting. Okay, I've recommended a book by Steve Nissan. I hope I'm pronouncing his name, but he's the author of Japanese candlestick charting techniques, and I use Japanese candlesticks. I mean, it's not the only way that charting. There's other methods of charting out there. There's point and shoot, live. There's graphs, there's mountains, there's all kinds of charting techniques out there. But the reason I like Japanese candlestick is that's how I learned. So so this in here is just a review. What you see is the green candlestick is a bullish candlestick. This green portion here is the body of the candlestick, and it's green because it opened up here. It traded as low as this down here, and then it traded as high as this up here, and it closed here. So the difference between the open and the close is considered the body of a candle. And in this case, when it opens lower and closes higher, it's a bullish candlestick. Okay, the upper wicks are considered the upper shadows, if you will, and the lower wicks are considered the lower shadows. Uh, and they define the total trading range for the day. So you learn a real lot, but you can get a lot by just looking at a single candle of a single trading session. And then over here we have I've colored this pink, or whoever did this had colored it pink, but usually it'll show up on a chart as red or negative. And that just simply means that the open was higher, the open and the close, which again defines the body of the candle. The open was higher than the close. And again, here are the wicks to the candle or the shadow. A lot of times you'll hear me refer to these lower shadows or the lower wick as the tail of the candle. That's just a habit of mine. I don't know if it's correct or not. Okay, so now the thing is, uh, you I highly recommend to read the book Beyond Candlesticks. I don't know what it costs. You can get it at Amazon, but it's a book by Steve Nissan, and it's very, very well written and illustrated. But what is important is what I gleaned out of the book is there are 7 important reversing candlestick patterns that give us a signal of when the market is about to reverse a trend. And since my system is based on reversing trends, that's very important to G3 investors. So we're going to go through this. Each time I'll try to review the basic candlestick. Don't worry if you don't get it right away. It takes a while to get used to it. It's not a big deal though. You can still see the trend whether you're looking at candlesticks, uh, any other type of charting, whether it's mountains or stick figures or whatever you want to call it. Okay, so let's look at 2 of my favorite reversing candles. Okay, and this all happened on one. We're looking at a chart here of the IYT, which is the iShares Transportation average. Okay, and we have what is considered a bearish engulfing pattern. Now that's a 2 candlestick pattern. And what you have is you have an uptrend, okay, and it has a series of red and green candles, that basically don't mean a whole lot at any given time. I mean, this candle here would have meant something if this would have reversed, okay, because that's a reversing candle. But we'll get into that later, but it did not reverse, so therefore it's a meaningless candle. But here you had a real high, a real big candle, and then you had a higher candle. Okay, notice that it gapped up on its open, and it doesn't matter the size of the body. What it matters is that this positive candle got followed by a red candle where the body of the candle, okay, red meaning it opened up here and it closed down here, and the body of this candle encompassed the entire trading range of that day. That is considered a reversing candle. Now, and G3 investors, a single candle doesn't mean anything. We have to have confirmation of what it means. So you can see here that what happened, okay, is that this large bearish candle was confirmed by 1, 2, 3, 4, 5, 6 trading sessions later when this candle went lower than this one. And so G3 investors would have gotten stopped out from this candle here, okay? And so because this confirmed that to us, these two candles in particular, that this trend was changing. Now, we didn't know at this point whether it was going to go right back up or go sideways or go down. In this particular case, it went down. But that's a very important reversing candle pattern at the top. It's a 2-candle pattern. And the key word is it can signal a major reversal. It doesn't have to, but it can. But the important thing is you must have a green candle that's higher than the previous day. This could have been a red candle. It could have been any kind of candle. But this, you have to have an uptrend, then you have a green candle that kind of gaps up from the previous close. And then you have a big body that reverses it. So that, in essence, is a bearish engulfing candle. It's just a reversal candle, okay, to me. The whole series must be in here, but this gives you a hint. So as soon as I see that happening, I'm thinking, oh, wow, maybe we're going to have a reversal here. Well, the next day, we didn't. We didn't here. I didn't really get excited until I saw this trading, and then this trading confirmed it. Okay, so that's a bearish engulfing candle. Now let's go to one of my favorite reversing candles at the bottom. This is the hammer candle. Okay, it's an important bottom reversing candle because it's usually found at the end of a long downtrend. In this case, we're only looking at a month of trading here because we're looking at trading on a interim basis or a swing trading system. And the purpose that I'm doing this is to teach people trading. You can trade long-term, short-term, intermediate term, whatever. You can day trade if you want to, but I wouldn't recommend it. But a hammer candle, it consists of a short body or a narrow body with very little upper shadow. The wick up here is small or doesn't exist at all. And it doesn't matter about the color of the body. The importance is that it happens at the bottom of the downtrend, and then it gets confirmed. But what really shows is this long wick, or this long tail, as I like to call it. Okay, and that has to be at least 2 to 3 times longer than the body of the candle. In this case, the body is very, very small, but it could have been clear up here, and to me, it still would have indicated that it's a hammer candle. Now, what is happening when you have a hammer candle? Sorry, being interrupted by the phone. Sorry about that. When you have a hammer candle, it indicates that the bears tried to push the trading activity down, and the bulls resisted or pushed it back up here. And the Japanese refer to this as hammering out a new base. And again, the candle at this point means nothing because this next day could have traded lower, okay, and it would have been a false signal, if you will, of a reverse in the trend. But in this case, the next day we had a green candle followed by another green candle and another green candle. So at that point, under G3's trading system, we would have been interested in getting in once it crossed, probably this candle right here. So like at 193.50 or something like that, we would have probably got back in to the IYT, because to me this is it's a new base, or it's sideways trading. The change in trend still hasn't been confirmed, but there's the signal. So in trading, what candlesticks do for me in terms of my trading system is they signal that, hey, this may be a bottom. So when I get a candle like this or a candle combination like those two, then it's a signal to me that we may have a change in the trend. Okay, it may, in this case, the trend was up. We had a reversing candle and it got confirmed. So in this case, we had a candle signaling another change in the trend to back up, and it looks to me like this is going to get confirmed, you know, at this point in time. I don't really know as I'm doing this video, because it hasn't been confirmed, because this didn't close above this congestion here. Really, I would want, that's that blue line against the 50-day moving average, and I would want to see it get above that line pretty quickly to say, hey, yeah, we're going to go higher here on the transportation index. So that's 2 of the 7 reversing candles. We've got 5 more. I'll try to find them in real exhibits instead of just using something from Google or the internet. You can also do that. You can look at it, but I highly recommend reading Steve Nussan's book. It's called Beyond Candlesticks, and it does a very good job of teaching one how to read charts with uh, candlesticks. This is Greg Gallagher with G3 Investors, wishing you good luck and good trading.